All right, well, I'd like to call the May 16th, 2022 Oklahoma City Maps Investment and Operating Trust to order. First item on the agenda is item number 2 is approval of the minutes from February 21st. A motion and a second. Record your vote.
How do you wish to vote on this one? Yes.
All right, the motion passes. Item number 3 is to receive the monthly investment flash report as of March 31st, 2022. We have Doug Anderson from ANCO here. Doug?
Good morning, Mr. Chairman and trustees. This is the March 31st report, and just for a bit of background, one more, please. For the month of March was a positive month. It's not been positive since then, and I think that when we're investing here, please remember that we are spacing this out over time. We're not investing all of the dollars at once. We did invest one half of the first $80 million allocation at the end of March, the other at the end of April. We don't have a crystal ball. We don't know how markets will react at any time over any short period of time, but we do want to take advantage of any volatility in the markets. If you look here, this is the month of March. It was positive. It was a reaction or a recovery from the initial uncertainty that we saw at the end of February with the invasion. And what markets have talked about since then are invasion, energy independence, and inflation. So we have gone from a period of time where investing was about the newest and best app out there to how are we going to pay for the food that we have to put on the table, or where are we going to get all the oil that we need. So the market has changed incredibly dramatically in a short period of about a year and a half. On this chart, you can see a heat map of the returns for the year-to-date period. So this is the first 3 months of 2022. You will see on the left-hand side of that tic-tac-toe board a column that says V and LMS on the horizontal side. So that what that tells you are value stocks, large caps, mid caps, and small caps, how they performed on a year-to-date. You also see B, that is the blend column, and G are for growth stocks. Growth stocks are traditionally technology, that type, communications, et cetera. Value stocks tend to be energy, utilities, banking, and insurance. And you can see that so far on a year-to-date basis that the value side has outperformed. Market has changed its character for the time being. If we look over on the, just to the right of that is the year 2021, so that's the entire period. So over that time, we had double-digit returns for all asset classes except for small cap value. Going down from there, I don't talk about currencies very often, but the US dollar is the strongest currency in the world right now, and it has been for a while. If you see that euro spot, so it's the euro versus the dollar, it's the ratio of how many dollars you have to pay to buy a euro, and since the end of March, it's gone to near parity. So a euro is about $1 right now. And that tells you it's not so much that the euro is weak as that the dollar is very strong, which tends to happen during periods of crisis or near crisis or high uncertainty that we have right now. On the, just below that are commodities. Again, I said oil prices have moved higher this year. Natural gas, you can see, has moved higher over the year. And if we go down to the bottom there, the BBG commodity total return. So this is a basket of commodities. So it's oil, agriculture, that type of thing. Metals also. And you can see that since the year started, it's gone from 211 to 266. So if you figure that out in return terms, that's pretty dramatic. And that's something we've seen for a while, which is why we're talking about interest rates, which is why we're talking about the Federal Reserve and how the Federal Reserve is now paying attention primarily to interest rates. The latest expectation is that the Federal Reserve will raise interest rates later this month by 50 basis points again. What we're also seeing, sort of the balance is that the Federal Reserve wants to reduce inflation without hurting the economy too badly. and that's sort of where we are right now. The economy will slow down to fight inflation. And we're seeing slowdowns in economics around the world. Obviously, Europe is slowing down because of inflation and economic uncertainty. I just heard this morning, or I watched a report on it last night about Chinese economic growth in the month of April. I heard it described as abysmal, and I think that that is not hyperbolic in any means. The way that they locked down their economy in April in the largest cities, the city of Shanghai is extremely large. It's larger than New York City by a significant amount. There were 0 cars sold in Shanghai during the month of April. And I know that's a small anecdote, but that just gives you an idea of how much they've slowed things down there. So when I'm looking at the charts, the performance, the month was positive. We invested the first tranche at the end of the month, so we didn't get much of that. If you look at the 3 months and the year to date, we have clearly gone in a different direction than we have in the previous 3 years. But again, we're investing this for a very long period of time. I don't want anyone to panic. I want to make sure that we know that we're doing this gradually in the investment process. And when it comes to time to spend money, we're going to be spending money on a gradual basis as well. If you look at the interest rates for the year-to-date period, compare that, the U.S. aggregate down almost 6%, the S&P up 4.6%. That makes it really hard to generate a 4% positive rate of return, given those are our 2 major choices for assets. So in the reasonable expectation, so far this year has started out pretty rough. Rougher than normal, because normally when equities go down, bond prices go up. And that's not something we've seen because we've got the inflation fears going on. The one positive about that is the Federal Reserve appears to be very strident about fighting inflation right now. So next slide, please. This is where the portfolio looked like. Again, we invested at the very end of March. So the first 40 million-ish tranche that went in, 53% in domestic equities, 9% in international equities. Fixed income was 33.7, and we do keep a reasonable amount of cash in the portfolio at all times at 4%. This is our target asset allocation. It gets down a little bit more granular than this, but this is what we expect to look like going forward. And next slide. Just to remind everyone of the investments that we are in, our start date reads 4/1, April 1st, because we invested at the very end of the month, and this is what we're going to be tracking going forward. So we don't have any returns for the total fund. We don't have any returns for domestic equity, given that it came at the very end of the month. But we do show longer-term returns for all of the component investments, and this is what we're invested in at the current time. An S&P 500 index fund, a mid-cap index fund, a small-cap index fund. So domestic equity, we're diversified, but it's a simple structure and it's an effective structure. Next on that is the Fidelity Total International Index Fund. You can see it was down slightly. There are some issues in tracking with international assets because of currencies, et cetera. And then our 2 bond portfolios right now are the Dodge & Cox Bond Fund and the PGIM High Yield Index Fund, or High Yield Fund. And over the last year, we have positive returns on all domestic equity. Again, we didn't realize this. I'm just showing it to you what it looks like. International index down. Strong dollar means lower prices for international stocks. And our 2 bond portfolios are uncharacteristically bad returns. Good news about bonds is that when the prices go down, the yields go up. And so that sets your return expectation going forward, and we're a lot higher today than we were even to start the year. That concludes the monthly report, and I'm happy to take any questions.
Any questions for Doug?
Doug, do you have any concerns about stagflation, like a period where growth is low and inflation continues to go up? That's just something I've been thinking about going into this sort of cycle.
Yeah, absolutely. And that's not something we've seen since the 1970s. And that's obviously a concern, and we have things that are common, right? As a time of conflict in the world in the 70s, where we did see oil prices go up dramatically. I think that one of the things that's a lot different now is that the US dollar has emerged from a place it was not the world's preeminent currency there. Today, it absolutely is. I think that stagflation, you have 2 things, stagnation and inflation. I think the Federal Reserve is very clear that they're going to fight inflation first, right? If you don't fight inflation and you have low growth at the same time, that can lead to stagflation. Unfortunately, it appears that, and Chairman Powell was pretty clear about this last week. He kind of changed his tune a little bit. Before, he was saying the economy is strong, it's resilient, but we need to handle inflation. Last week, he was a little bit more stern about it, and he said, inflation is our primary concern. I cannot guarantee that we will have a soft landing of the economy. So they are confronting inflation first and foremost because they figure if inflation starts to run away, they can't contain it. So it's sort of a stepwise function. And I think it's to fight stagflation, honestly, because that was the word that was kind of going through the circles right now. Now, that's not to say that they're going to raise interest rates 8% this year. They've done 75 basis points already, 2 rate hikes, so 125 and 150. 50 basis points probably going to happen this month also, and then possibly the month after that. So that's not something they've done for a very long time.
Yeah.
That's a good question. Thank you.
Thank you.
All right, any other questions? All right, with that then, I would be happy to entertain a motion to receive the report. A motion and second, record your votes. And the motion passes. Now we're to item 4A, external audit contract between Oklahoma City Maps Investment Operating Trust and AGH for 21-22. Mr. Boggs.
Yes, so this is the third of the professional contracts that we will have here within the trust. We have the investment consultant and the custody bank. This is for the external audit that's required. So this is, it'll be roughly $12,000. For this contract, and this is the same auditor who does the audits for both the City of Oklahoma City for the annual comprehensive financial report, as well as the other trust within the city, and so that's going to be in line with that. We do have members from the Accounting Services Division here today that can answer any more detailed questions you might have on our audit contract with AGH.
All right, thank you, Matt. I'll entertain a motion. A motion and a second to record your vote, please. And it passed unanimously. Item 4B is the spending policy. The Oklahoma City Maps Investment Operating Trust is recommended by the Trust Investment Consultant and Co.
Yes, so per our trust indenture for this trust, we are required to have a spending policy that is approved by the trust and also approved by City Council. When we did contract with our investment consultants, one of the things that we asked them to do is help us to draft this spending policy, and that is what ANCO has put together. And so Doug Anderson has a brief presentation just to go over the spending policy.
Thank you, Matthew. This could be the briefest presentation I've ever given here. It's 4 lines. This has been discussed by everyone on the trust board, and it's fairly simple. This sets the guide rails. Managing a foundation or a trust like this is balancing. We want to spend as much as possible to support the programs, but we want to spend as much as possible over the long term. And that's why we limit it to 4% of the average market value of the portfolio judged over the last 12 calendar quarters. So we're taking a smoothing approach to this, which if the markets are very, very strong over a 3-year period of time, it will reduce our spending amount because we're starting here, and as we go up, we're taking 4% along the way, right? 12 different 4% to give to the whole. If the market goes down dramatically, we're going to be spending more than we would otherwise if we took a one point in time. So this balances the short term with the long term, and it gives us a relatively stable amount to spend on the programs. And this is step one. As we go forward, if some of the programs have different spending needs, different cash liquidity needs, we could adapt this individually, but as of now, this is a fantastic way to start. I think latest figures I saw almost 75% of organizations like you use a smoothing spending rate. And of that 75%, almost 70% do it over a 3-year period of time, which is what this is. Happy to take any questions.
Doug, I have just a quick question. I know that the one line here says it's up to the board's discretion to determine the amount every year. Is it up to the board to protect the corpus? Is that kind of how it's going to work for this point?
Yes. If you look, the wording of this is specific in some places, but it's also flexible in other places. The goal of the spending policy, but then spend at least 4%. So it definitely encourages the spending, but it is the goal. And if I remember correctly, the spending policy is approved by this board, and then it moves up a level also. So is it the,
Yes, this will be considered by council also.
yes. And it is also, the statute was written in such a way that we didn't have a lot of flexibility here. It was clear, which I like. So, yes. But we do have to protect corpus also.
I have just a quick question on that. So should we add the amount will be reviewed and determined by the Board of Trustees and ultimate approval by City Council if it needs to go up to the next level?
I meant the policy would be approved by council.
That's,
Just this policy, I think we'll set that.
Okay.
yeah, that's a great question. Thank you.
All right, any other questions? I will admit, when I got this, I was thinking, that's all? But, my apologies. All right, I'll entertain a motion. That passes unanimously. All right. Now we're to reports, comments from trustees, staff, or interested parties. Having none, we are adjourned. Thank you.